Hey there, awesome accounting student. Mark Franke here. This is Accounting 101, and these are merchandising transactions. And in this video, I'm going to use the serial problem to illustrate the transactions that happen in a merchandising business. This is on page 185 and 186, and I've given you some worksheets in Canvas for you to follow along that you can prepare a journal, and I will go through each one of these entries for the month of January. This problem is a problem for 3 months. This is a big problem, and I wanted to tell you right now, you don't have to do this one in pencil or in Excel. You only have to do it in Connect. But for purposes of this video, there's a couple of points available. If you fill out the journal and submit it in PDF, then you'll get those points. But most of the points are preparing this whole solution for this problem in Connect. You don't have to do an Excel problem for this exam. This problem, the serial problem, will serve as those points. So there'll be 10 points available in Connect to prepare a solution to the serial problem. So let's get started. This is the problem that goes from every chapter, and this is the company business solutions, and the name of the person is Santana Ray. She's the owner of the business. And so let's get started. So the first transaction on January the 4th, and I'm using 2018, but actually it should be 2020. So I will change that as we go, just so that it's consistent with the textbook. The first transaction says, the company paid cash to Lynn Addy for 5 days' work at the rate of $125 per day. 4 of the 5 days related to wages payable that were accrued in the prior year. In other words, we had already set up an accrual for the pay that she had earned in December, but now on the 4th of January, we're actually paying her. So we're going to relieve that payable and then record the expense for the 1 day that she worked in January and pay her for the full week. So she gets $125 per day. We're paying her for 5 days. That's $625. Debit wages expense for 1 day, $125. Debit wages payable for $500 to take out that the payable that we had recorded last month, and then credit cash to record the payment of her wages. Transaction B, she invested an additional $25,000 cash in the company in exchange for more common stock. So she's put some more money into the business and issued stock in exchange for that money. Debit cash and credit common stock, $25,000. This is transaction B. Transaction C, on January the 7th, the company purchased $5,800 of merchandise from Kansas Corp with terms of 110 net 30 FOB shipping point invoice dated January the 7th. So in this case, we bought some merchandise, something that's going to be resold. So we're going to put it into the asset account called merchandise inventory as a debit. That's going up. And we're credit accounts payable because this is on terms 110 net 30. FOB shipping point means that as soon as it leaves Kansas Corp, it becomes the inventory of Success Systems. Transaction D says, this is on the 9th of January, the company received $26.68 cash from Gomez Company as full payment of their account. So this is not a situation where we did more work for Gomez Company. They're just paying us for something that we already did. We're going to debit cash $26.68 and credit accounts receivable $26.68. Now I've also set up an accounts receivable ledger. So if you want to keep track of each individual customer, we're going to go over here and credit Gomez Company. This is transaction D. And by the way, you have some general ledger accounts here if you want to keep track of that, although again, you don't need to do that and turn it in. It's just for your purposes. Transaction E says on the 11th, and we'll change that to 20. The company completed a 5-day project for Alex's engineering company and billed it $5,500, which is the total price of $7,000 less the advance payment of $1,500. The company debited unearned computer services for revenue for $1,500. In this case, we did $7,000 worth of work. That's why the credit is going to go to the revenue account. They prepaid part of their fee, $1,500, so we're going to relieve or reduce unearned computer revenue, which is a liability account, and then we'll set up a receivable for the amount they still owe us. Debit unearned computer revenue, $1,500, debit accounts receivable, $5,500, and credit computer services revenue, $7,000. Remember, every journal entry needs a description. If there's a calculation, go ahead and put it in the description and document it. Transaction F is on the top of page 186. This is on the 13th of January. The company sold merchandise with a retail value of $5,200 and a cost of $35.60 to Lou Corp. Invoice dated January the 13th. So whenever we sell something and we're using a perpetual inventory system, which we are in this class, we have a compound entry that's going to include recording the sale and recording the cost of the goods that were sold. So in this case, we're going to debit accounts receivable, $5,200, credit sales, $5,200. That's for the selling price. Then for the cost, we debit cost of goods sold, that's an expense account, $35.60, and credit merchandise inventory, $35.60, which is going to reduce the inventory in the merchandise inventory account. Transaction G, on the 15th, the company paid $600 cash for freight charges on the merchandise purchased January 7th. Because the transaction on the 7th was FOB shipping point, we, Success Systems, are responsible for the freight. Here's something to keep in mind. Whenever we purchase freight for inventory, we put it in the merchandise inventory account. We used to use freight in a periodic system, but here we're going to use the merchandise inventory. It becomes part of what we bought. The freight to bring it in is just part of the cost of that merchandise. Debit merchandise inventory, $600, and credit cash, $600. Transaction H is on the 16th. The company received $4,000 cash from Delta Company for computer services provided. So we actually did some work in this transaction. This wasn't for something we had already done. This is actually revenue. So debit cash, $4,000, credit computer services revenue, $4,000. Transaction I was on the 17th of January. In this case, we are paying Kansas Corp for the invoice from January the 7th, net of the discount. They offered us a discount of $110 net 30. So we're going to, and I'll go back and show on the 7th, here's the 110 net 30. So now on this transaction, we are going to take the discount. So I've prepared a schedule. The original amount of the purchase was $5,800. Again, that's this transaction C. $5,800 was the amount. So we're going to take the amount of the purchase. We're going to deduct a 1% discount, which is $58. We can just slash off the zeros to get 1%, move the decimal point over 2. So what we're actually paying is $57.42. Again, this is different than what we did in Accounting 100 because we were able to take a discount, we are going to apply that against the merchandise inventory account. Debit accounts payable, $5,800. That relieves the payable at what we put it in at. We credit merchandise inventory, $58, and credit cash, $57.42. Show the calculation in your journal. Very important. Transaction J on the 20th of January. This transaction, we gave a price reduction to Lou for some reason. Maybe it was non-conforming or whatever happened. They returned it and, it was bad. It was broken. It was spoiled. And so we can't resell it. So we're just going to get rid of it. If we were going to resell it, we would put it back into inventory at our cost. But in this case, we're not going to resell it because it's trash. So we debit sales returns, $500, and credit accounts receivable for $500 for the Lou company. On the 22nd of January, this is transaction K. The company received the balance due from Lou, net the discount and the allowance. So we gave our customer a 1% discount, but they had returned, or actually we gave them an allowance for some product that was broken or spoiled. So we have the amount of the sale is $5,200 originally. The amount of the return was $500. So what they owe us is $4,700. They're going to take a 1% discount. So we actually received a check for $46.53. Debit cash, $46.53. Debit sales discounts, $47. And then credit accounts receivable for the amount in accounts receivable that they still owe us. On the 24th of January, this is transaction L. We had the company return defective merchandise to Kansas Corp. This is one of our vendors that we buy merchandise from, and apparently we had something defective. We sent it back. So we're going to reverse the entry that we did originally for part of it. This isn't for everything. This is just the amount we returned. Debit accounts payable, $496, and credit merchandise inventory, $496. Merchandise inventory is going down, and accounts payable is going down because we don't owe them as much as we did because we returned some stuff. On the 26th, this is transaction M. The company purchased $9,000 of merchandise from Kansas Corp with terms 210 net 30. Same transaction we had before. We just bought some more stuff. Debit merchandise inventory, $9,000. Credit accounts payable, $9,000. Also on the 26th, we had another sale. This is transaction N. Company sold merchandise with a $46.40 cost for $5,800 on credit to KC Inc. Invoices dated January 26th. So in this case, we have two sides to the entry. We have to record the sale and then the cost of sales. The gross profit here is not very much. It's very thin, between $5,800 and $46.40. Debit accounts receivable, $5,800. Credit sales for the selling price. Then debit cost of goods sold, $46.40. And credit merchandise inventory for the cost. And then the last transaction we're going to do is just pay the wages of our employee. Lynn Addy is her name. And we are paying her for 10 days work. She gets $125 per day. Debit wages expense, $12.50 and credit cash $12.50. So now you have a guide for the transactions for February and March. You have to record those. Again, this is all going to be done in Connect, but I'm going to give you some check figures. Here's the check figures for the balances before the adjustments, and then the check figures for financial statements after the adjustments. Again, this is information on the worksheets that I provided in Canvas. And so you can use these to make sure that your numbers match when you do this problem in Connect. Okay, that's it for this one. Hopefully this gave you some examples to follow. And you can now go into Connect and you're going to put these same transactions in, plus the transactions for February and March. This is a really good problem for reviewing everything we've done in the first 4 chapters, and it's worth 10 points. Get her done. Thanks for listening, and I'll see you next time. Bye-bye.